A big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. Now, 2021 has probably been the year with the most ups and downs, but it definitely turned out to be a good year for advertising. Now, according to reports, global advertising recorded its highest growth rate ever at 22.5%, while India witnessed a 14% growth in its ad spends in 2021. Well, do these numbers really add up? And does this mean that the advertising industry will continue its bull run in 2022? Well, let's find out from the media luminaries who are joining me right here on Brand Equity. So without further ado, let me introduce to you my esteemed panel. First up, Sinha, CEO, IPG Mediabrands, Anupriya Acharya, Chief Executive, Publicis Groupe, and last but not the least, VikramSakhuja, Group CEO, Madison Media OOH. Well, thank you so much, ladies and gentlemen. Truly a pleasure having you on the show. First things first, I'd like you to, look at what's been reported so far when we talk of global advertising trends. We've had global, conglomerate CEOs talk about the highest ever growth rate. I just want that to be put in perspective and not take the base year as 2020 because that's misleading. And if you could take the base year as 2019 and juxtapose it to 2021, how did we do globally? And then I'll come to India. Happy to start with you, Shashi.
Well, I think global growth still, firstly, you're very right that you're looking at 2019 as a base. And from my limited perspective, what's happened in the global world, there is growth, but I don't think as dramatic as it's made out to be. My estimate is will be about 6-7% on 2019, won't be higher than that, is my estimate.
Okay, but you're saying so there has been growth if you compare it to 2019, just not it's more exaggerated than ground reality. Correct. Okay, Anupriya, your take?
Pretty much on similar lines. At a global level, I think the growth has been there. But like you rightly said, it is not to be confused. Some of the figures that we are quoting are more in with respect to 2020. And we know that 2020 was a washout year because of the pandemic hitting globally across all the markets. So hence those growth figures look huge. But like Shashi rightly pointed out, if we compare it to 2019 and where we have landed over there, it's a few percent points up from there, which is also a great thing because that's not how we were believing it would be when 21 started. So if we have ended there, I think we are in a phenomenal place. And in fact, for India also, I'd like to add our assessment is that through the year, we've seen all the reports last year, and we expected that maybe 2021 might fall short of 2019. But my estimate is that it is higher, a few percent points higher than 2019, and it's in a very strong position for 2022.
Okay. Vikram, your commentary, do you think by what both Shashi and Anupriya have said, it looks like 2021, we've come back to pre-pandemic levels. Do you think that is actually accurate globally and in India? And if so, what have been the big triggers?
Look, in India, we take out a sort of ADEX report every February. In fact, they're going to be coming out with the definitive one for 21 and then 22 in about maybe 2 weeks or 3 weeks from here. Now, we had come in with 21 saying that calendar 21 is likely to have about a 25% growth on 20. It is actually going to close at 37% growth on 20.
On 20?
On 20. Obviously, we're talking about it was on a low base, but the point is we had predicted 25 and we are going to close at 37. By closing at 37, we will be about 9 to 10% higher than 2019. So I think the consistent message you're getting from all three of us is that there has been growth versus 19 and of course 20. Only thing in our case, the point I want to make is the growth is much higher in 21 than we expected.
I see. Shashi, looking at what all three of you have said, am I to assume that 2021 has been a fantastic year for the advertising industry, or do we need to put that in perspective?
If you're coming into India, I have a slightly different take. So our sense, and maybe each one of us has a different sense, there is growth over 2019 as far as India is concerned, but I'm not sure it is as high as Vikram has captured it. Our sense is it is, middling. I mean, these numbers beyond a point we see from a distance. But so if Vikram's numbers are right, 9 to 10% is very good to be thrilled about. But my own take is just slightly lower. It's just, 4-5% is what my take is. But there's just numbers, but it's a trend. So we lost 2 months. And by the way, I'm seeing Jan December. So let me clarify. We are seeing Jan December. And, we lost 2-3 months very dramatically. There was a good comeback in the latter part of the year. But then a lot of companies had, high costs, inflation. A lot of FMCGs pulled back in September, October, as you're seeing, levers and all. So I think I think it was slightly more muted than what Vikram called out.
Anupriya, take me through which media has really performed very well, because we know mediums such as print, outdoor, cinema, to some level radio, have all not been beneficiaries of the pandemic, let's say, as opposed to maybe a TV and digital. So take me through the superstars and which has really overperformed to make up this kind of growth.
All right. In our assessment, of course, when we talk about 21, firstly, the drops that we saw in 2020 itself, first we need to take that into account.
Yeah, sure.
And obviously, given the pandemic and the nature of the pandemic and the lockdown, we saw a huge drop on everything outdoor, everything experiential, and also a huge drop in print, given that contact was not in fashion. And hence, obviously, a lot of 21 is context to that. In 2020, also, we saw that television, because of the indoorsy nature of the year, we saw that television did very well because there was more consumption of that. And after the initial challenges of the lockdown and the supply side challenges, I think the market pretty much got trained in terms of how to keep the supply chains moving, at least for the essentials and all of that. So television didn't take that kind of beating because one, the viewership was very high. And then, of course, there was advertising, which came back willy-nilly after a quarter in some form or the other, and peaked, of course, in the fourth quarter. On digital, there was no dip in 2020 as advertisers and clients and everybody realized the potential of that, given the very high engagement on the pandemic, right? And obviously, the advertising opportunity was not missed. And that saw a growth in 2020 as well, despite the pandemic. Now that trend has grown for television, and it obviously 21 all media grew, but television obviously was growing on a base which had shrunk much lesser. Digital continued to grow on a growing it continued to grow and never sort of degrew in 2020. Print, we've seen it had a growth over 2021, but it really peaked in Q4. And we expect that from there, as the whole, as vaccination drives have been successful and ongoing, and the third wave we see has very, very little impact in terms of, the lockdowns are there, but the restrictions are limited, right? And the businesses have understood a way of working around these lockdowns any case. We believe that in 22, all media is set to grow. So for a short answer for everything that you've asked is when we talk about the growth and all, while we're saying that 2021 actually has closed a few percent points above 2019, the nature of that is a little different. So we have television and digital occupying the larger spots in 21, given what I explained. And some of the media like out of home and radio and print has gone down. But 2022, we expect that there will be a faster growth on some of these media, given that we expect the market to open up much more. At least that's our expectation.
Okay. Vikram, I have a similar question to you, but before that, I want you to put into context for me what I've been reading in terms of international reports on the global advertising industry. I know you're going to say that I want to keep it to India, but you've had enough experience to give us that narrative. According to reports, it says US, China, and UK remain the world's most important growth markets, and this is really in context of phenomenal growth being witnessed globally. But you look at APAC's performance versus other markets, for example, look at North America or look at EMEA, or you look at Europe. It seems like APAC is being touted as the as a market that didn't perform as well as the others? What would you ascribe it to?
Actually, I don't know which reports you're referring to. I think US has had a bull run. US and UK, in fact, for a couple of years have actually been doing quite well, pandemic notwithstanding. China was the one which took a big dip. So I think in China's case, we are really seeing the base effects also, because 20 was bad, so 21 was better. But my understanding is rest of APAC is not quite tanked. So I'm not very sure. I don't know which which reports you're referring to. Like, for example, India is a very prominent part of APAC, and we've done very well. Australia has done reasonably well. Indonesia has done reasonably well. Philippines and Thailand, they're relatively smaller markets. They may have struggled a bit. Vietnam has always been a growth market. So I think that's done pretty well again, and it's becoming a bigger base. Taiwan, I think, has been steady. So Japan, I don't think is really taken in the APAC thing because it's very large and it's seen by itself. So Japan has had a little bit of a beating. Yes, so Japan has had a bit of a tough one. But overall APAC, I wouldn't sort of ring the business. So I wouldn't say that it was a very bad showing.
If TV and digital have been the superstars in 2020 and 2021, as Anupriya just pointed out, digital today, I'm sure when you do your report, in the next 3 weeks, I'm sure you'll also project the digital trajectory a lot higher than what it was, let's say, in 2019. So that will probably get even more share. How is that working out for media agencies and global conglomerates in terms of actual profitability? Once your digital component gets bigger and bigger and bigger, and your traditional media is getting smaller and smaller, how is that working in terms of profitability and revenue?
I think the interesting thing which is coming out from our standpoint, in 2020, the share of the print came down from roughly about 28, 29 to 22, and digital became the clear number 2 at about a 33 share. TV was at about 38 or maybe 39, somewhere there.
Yeah.
So we expect the gap between TV and digital to come down even more in 2021. Now, there'll be some people who are saying digital is going to overtake TV. Other people are going to say not quite yet. From our point of view, you'll have to wait till the 16th of Feb. But no doubt about it, the momentum of digital has gone up. Now, in terms of profitability, or for that matter, the entire reason the ethra of an agency, look, I think firstly, we just need to, obviously, everybody has to get their digital muscles up, no question about it. But it's also an environment where media agencies need to work the entire integrated setup. So for you're going to find out that e-commerce after FMCG becomes the next biggest player when it comes to TV. So TV cannot be sort of wished away, or nobody wants to wish it away also. If you're just a digital agency and you can't handle the rest, you are again irrelevant. So the game in the entire media agency game is to become that much more proficient across all media and embrace digital and tech and the entire piece a little bit, a whole lot more. So I think that's the takeout. As far as profitability is concerned, I think we all have to just tool our business models. We have to work out productivity. We have to work out the way, automation and entire use of MarTech connect. Because digital, we did an audit a long time back. For every $1 that you invest in TV, it requires 4 times the effort to invest that $1 in digital because of the real-time optimization and so on and so forth. Now, there's no way, I don't think the clients are going to allow us to charge 4 times the commission on that we are able to charge on traditional. So if we don't do anything, if we treat digital like we treat traditional, obviously we have a profitability problem. But no agency is actually thinking that way. So we are right now rejigging our tools, our entire digital processes, the entire use of MarTech, automation, all of that. And I think in the process, I think somewhere along the game, we've in advertising, I think media agencies, at the risk of being a little immodest, have managed their P&Ls pretty well. And I think we'll continue to do so.
Okay. Shashi, let me throw that question right back at you. Do you think the time has come to ask clients to, cough up more money for digital?
So I put it 2 ways. One is, digital is large, you break it up into two parts. There is the brand part of digital and there's the performance part of digital. First, let's take the brand part, and that, as Vikram said, is through the line. Historically, in fact, it's changing. Historically, a lot of our contracts were towards digital because digital was small and the effort to output was higher. You were getting higher fees or commission for digital. There was, because see, on free clients, it doesn't matter because all the number of people you're putting in are being compensated. But on commission clients, you were getting a higher, in fact, now it's getting equalized because they're saying, listen, digital value has gone up so much, so therefore it was equalized. But otherwise, the problem never existed because digital, in any case, so if a client paid me 3% on TV, he would probably pay me 5-6% on digital. Having said that, I think the big growth or the big future is going to be the performance part, which is all your ad networks. Because there are huge margins because finally you're being paid for performance. So a lot of clients today are moving towards and saying, okay, we understand that there's a brand part. You can't measure, but performance can be measured. And Vikram alluded to it. We are doing a lot of e-com deals. We're not making big money yet, but whenever we cross the critical path, critical threshold, we will make money because we are saying you pay us as a percentage of your performance, So whatever sale you make, you pay. So there will be new business models which will evolve. In fact, it's good for us because media agencies so far have always been on the client side. It doesn't matter what the client does, whether they do well, not do well, we get a fee or we get a commission. With these performance models coming in fact, I'm encouraging our teams to move into performance, there and say, listen, pay for performance is going to be a great opportunity. So I see, on the contrary, that while yes, effort to output in digital for the timing seems to be high, but in the long run, the upside is very high for us.
I'm very interested in understanding what you just said. When you say, I know the performance metrics have been in conversation for a long time, but when you say that, what do you mean? When you say that you've deployed so much X amount of money on this media plan, you're expecting conversion to sales?
Can I give you an example?
Yeah, sure.
So, for example, we have an old legacy brand called Zodiac. We've been working with them for the last 30-35 years. When we were doing digital for them, in the classical brand way, we turned around and said, okay, we will charge you if you're charging 3% on, on traditional media, whatever print there should be primarily print. Give us 5% on all the digital work we are doing. Just throwing numbers at you broadly. However, they got into e-commerce, this online offline combination, and we turned around and said, we will do media for you. We will leverage the media, we'll deploy, and we will take 25% of your sales. Whatever sale you generate, 25% will come. You don't pay us for media. So I'm saying it publicly, that's the model. Now, there can be a variation of the model where you pay us for media, but our fee comes in the form of performance, what we generate for you. So the first 6 months was a struggle because we didn't make any money. But when you see the upside, and the upside will come, hopefully it will come. We're already seeing a positive upside now. It will wipe out, whatever we would have made otherwise. So there is a skin in the game.
And you're saying that more and more clients are open to this kind of model?
More and more, but I'm saying there are parts of digital where it's possible. So with a lot of mainstream agencies coming into e-commerce and helping clients on their e-commerce ventures, as Vikram called out, I think there's a huge possibility in the performance side, which is what you make. So in a manner of speaking, our integrated through the communication will become the bread and butter product, which will get us the volumes, but which will be low margin. But it is stuff like this, which will be high value, maybe less volume. You'll get only 20% of your clients going that way. But that's where it's going to be high margins for us.
You agree with that, Anupriya? Moving to performance metrics?
This is a very interesting conversation, and I'm glad you asked me. I wanted to add to what Shashi was saying. So we run a very large performance shop. And interestingly, what we've seen is that, the growth in performance, there's a lot of tailwind. Like Shashi rightly said, a lot of digital is moving to lower funnel and the market is getting more price sensitive, and hence performance is becoming extremely important. So there's a lot of tailwind, and hence we saw very, very quick expansion, which in fact brought with its own set of sort of unique problems, which is of talent. So I think the profit, before we even get on to discussing profitability, I think one of the challenges that the industry has is capacity building. So we may all have capabilities, and see, digital is like a very wide term being used. Actually, there are sort of tenets within digital. So you have performance, and you have commerce, then you have programmatic, and then, everything else goes with it, because you need to understand data, you need to understand MarTech. So, and the other thing is that this market keeps evolving. The algorithms that the platforms use keep evolving. So one is that you have to have more and more and more digital practitioners in your organization Two is they have to continuously keep getting upgraded because the algorithms are changing all the time and newer technologies are coming all the time. So it's not like you have somebody and then, it's okay. They know it all like it was earlier in the TV world, for example. So one of the biggest challenges that is facing the industry actually is capacity building. There is not enough talent as much as the requirement from the market. And I think this is and then it doesn't help that there have been some 40 more unicorns which have been born in 2020. And all of that, agencies are like a favorite hunting ground for all of them, because obviously there is this ready talent cheaply available. So obviously, it's a double whammy. So on one hand, the requirement for digital talent is very high. On the other side, clients want all of that performance marketing. I think it is time for us to sort of reconvene and figure what are the right sort of commercial models for that. Otherwise, it becomes unsustainable.
Sure. Vikram, different question to you. She's right, digital is a large bucket. We say digital is growing. But I mean, in digital, we also know 70% of growth is coming from social, right? Which is essentially being dominated by Facebook, now called Meta, Amazon and Google and Alphabet. So I'm curious to know, when people have been investing so much in it, all your clients, all of you have deep relationships with all these behemoths. We still don't have a single currency. They're still walled gardens. We're talking about performance metrics. We don't even have a common measurement yet. I don't see the industry really voicing and taking on these, the big boys saying, get your act together, otherwise we'll pull out. I see some kind of movement or some kind of, protest happening in global markets, especially the US. But I find in India, we're pretty subservient to the big digital boys.
I totally reiterate and your demand for a currency. I think we need it. And for the most measured medium not to have a currency, it's an absolute travesty. It's a joke. To say that we're doing nothing about it is maybe a bit harsh. We're not doing enough is probably more accurate. Yes, and the big boys are probably sort of dominating the conversation out here. So, but the reality is the power lies with the advertiser. The day the advertiser and the big boys come in and say that enough is enough, we really need one consistent set of data. Like, for example, in the 90s, the Big Daddy Star TV, we wouldn't accept their bills. You had to have a third-party monitoring, and it was only after several years of log reports actually being 99.99% accurate that you could actually use theirs to actually pay a bill against. Now, against that, Google's bill remains sacrosanct, and even if you have third-party people saying that maybe in-market audiences and deliveries were not quite what Google is saying, you can dispute it and you can try to get something out of it, but finally Google's word prevails. I'm just saying Google metaphorically for the large big guys.
Sure.
So somewhere along the line, I completely say that we should do this. We should have a currency and it should be demanded. And somewhere the people who have the money, who have the power to say no, are the advertisers. If they come back and say we will stop advertising, I think the big boys will listen to them. It's as simple as that. That said, I think from the industry, we have been making a few, Shashi has been a great champion of that. I've been doing a little bit on the print publication side, but we haven't made headway. So I think, yes, our report card doesn't read very well there. Hopefully 22 will be better on this count.
Shashi, given that we are continuing to believe in, the Googles and the Metas and the Amazons of the world, you still see 2022 digital having a supreme growth, or do you think you're talking to large clients to say, hey, stand up and tell them that either we have a unified currency or we're not spending money?
So they're two independent things. Yes, for a medium like this, we need measurement, undoubtedly, absolutely. But will that hinder growth? I'm not sure in the short run. In the long run, something may happen. In the short run, there's so much momentum happening. And I repeat what I said earlier, the brand part is fine. The performance part, any case, you're getting to see for yourself. You see, as Anupriya pointed out, there's so many aspects to it, be it programmatic, you're seeing. So we run large CRMs for auto clients, we are seeing the results. So we don't need any measurement. So measurement probably will come in and help really in the brand part, which is the top of the funnel, upper funnel actions. The bottom of funnel actions, where the growth is coming from, is actually, pardon my saying, so I digress for 2 minutes. I'm not sure whether you see dramatic growth in digital in the brand part. Yeah. So it's because finally a client has that much money and they allocate whether it's TV or digital, where the thing. The money, as Anupriya called out, is in the because of low differentiation. The money is all coming in the performance part. And performance part, you have enough metrics in place. So to answer your question, yes, we need unified measurement for a variety of reasons. Will it stop growth to digital in certain areas? No. There is enough way to track performance there.
So, given what's happened with BARC and now ratings coming back to the fore, do you think if TV or networks state the same, saying that go by output and not by ratings, if you can do a Facebook investment or a Google investment or a YouTube investment, without, they're sharing their ratings and it's their own little research that they put out, would you accept that? Would the body accept it when large TV networks say that?
For 15 months, we've been doing that. Firstly, 15 months we have done it. The ratings are not there, news ratings, and we have in good faith invested whatever investments you have made. But like I said, there's a big difference, and mark my word, there's a brand part and there's a performance part. If the TV channels have a performance part which they share with us, definitely, because that is what it is, and there can be surrogates for your performance, like your YouTube, whatever. There can be many surrogates. But the brand part, whether it's digital or whether digital also has some measurement, like I said, the Nielsen tags are in place just now. Your campaigns can be measured, So if TV channels allow that, otherwise, I think in the long run, unfortunately, television is the top end of the funnel, and that measurement becomes difficult. If television allows performance measurement, it will be nothing like it. So in a nice way, I've given a clear answer to you.
Right. Anupriya, looking at 2022, what do you foresee as the challenges? We've seen, in 2021 itself, we've thought that, okay, the worst is behind us. And then, we get hit by a new virus, things come to a standstill again. Theaters, poor things just started. They're back to being closed. So there's a lot of up and down happening there, and there's no guarantee it's not going to happen in 2022. It's possibly a way of life. Given the context, what are you seeing as the major challenges in 2022?
Few things that come to my mind, of course, is that we talked about the third wave. There's still a large part of our vaccination unfulfilled, and then we are talking about boosters. So one is that needs to continue as strongly as it has, and if we can accelerate even better. So there should be no hurdle coming in the way of that. Second thing is businesses have learned to live with some restrictions and all, and if any more waves come in and they are mild, I guess businesses will at least sort of overcome them. But the some pockets definitely continue to suffer, and that could be a challenge, which is the entire travel, hospitality, some of those more outdoor kind of, cinema, outdoor, all of that can continue to suffer, and that will be sad actually. And the other thing which can possibly put a little stop to 2022 momentum is this, what we keep hearing about, the various component shortage and the chip shortage and all of that in many categories, and it is real. It is impacting the growth of, so the good thing, of course, has been that largely a lot of 21 is also driven by the domestic demand and the consumer demand, really, which was there. Some bit of it could have possibly got filled up last year, and we may not see that kind of a pull this year. But India being a huge domestic market, a young country, growing and all of that, so we are less worried on that. But if the supply side does not take off in some places because of manufacturing challenges or connectivity challenges, then that can be the other spoil sport for the year.
Yeah, so I'll take that forward, Vikram. She's talked about the supply side challenges. I'd like you to, comment on how you see consumer spending, and if you can juxtapose it with 2019, how you see consumer spending and how you see client spending for 2022.
I'll start with client spending because it's a sort of as a segue from what Anupriya said. The biggest headwind that we'll be facing will be input pricing. So inflation is high, almost without exception across sector and category. And that is putting a squeeze on profit margins, and therefore advertising gets hurt. So that is an issue. The second thing we have to look at is quarter by quarter, because if one thing that COVID has taught you is Annual plans have gone out of the window. Everything is monthly planning. Now, even if you have to look at 2021, the reality is that the first quarter, Jan, Feb, March, was a boom quarter, which was cycling a recession pre-pandemic Jan, Feb, March of 20. So we got fantastic growth there. And then in the second one, AMJ, April was fine, but May, June, because of the COVID impact, was also there. We had a bad COVID impact in May, June of 21, but it was still better than 20. And then again, from July till December, we've had a reasonably good run. But October, November, December, the growth was more muted in 21 versus 20, because even 20 was great. So I think as you cycle, now if you look at 22, we're cycling a very, very aggressive first quarter. So I don't think you're going to get 15, 20% growth in the first quarter. Second quarter, let's see if there's, now hopefully the worst of the Omicron wave is over, or will be over by the time April starts. So April, May, June, which is otherwise a bumper quarter, I'm hoping there won't be any COVID headwinds there. So I'm looking for a very good growth out there. And then the rest of the year hopefully will be good. So from a overall advertising standpoint, input cost 1, quarter by quarter planning 2, sector importance 3. Auto has had a very bad time, BFSI has had a pretty bad time, and telecom has had a very bad time. Otherwise, these guys were very heavy spenders. FMCG remains the bedrock of Indian advertising. It's steady, it's moving well, and it keeps on getting growth. So I think they're in a good shape. They'll hold the ADEX well together. E-commerce is the growth engine, has been there for the past few years, will continue to be. So it's the other ones which really need to now step up, and I hope they need something good. Retail, of course, has had a very bad time. Hospitality has had a bad time. Entertainment has had a bad time. So hopefully if these they'll pick up, all of them will be this. I think it's going to be a little bit of wait and watch on the consumer side. By and large, consumer spending will be there. Will there be major growths? No, it'll be cautious optimism. People will still look for deals. People will still look for promotions. So I think that will continue in 22. But I think people will move a bit back into brand building, brand love, and move away from a little bit of the promotion-led advertising, which has sort of reigned over the last 2 years.
Sure. Your closing words, Shashi, on how you look at 2022 and, what's what.
I hope and pray what Vikram and Anu said works out well. I am not too sure, because as they said, this is what's happening all over the world in terms of input costs going up so dramatic, 35-40% increase in costs. And as Vikram called out, FMCGs are the mainstay of advertising, and that's where the maximum effect of input costs are. And the tragedy is, rightly so, every quarter when they close, the first thing they cut is advertising. So the other point is, India is, if I may say so, a share of voice market. So what one advertiser does, the others also do. So, and Vikram, we discussed it enough times. So if one pulls back, the whole table will move down. So I hope and pray they're right, but I worry that at least the next 6 months, that may not be true.
Fair enough. I think that's given me and my viewers overall broad perspective of the year gone by and the year to come. Thank you so much, Vikram, Shashi, and Anupriya. Always a pleasure, and looking forward for more detailed reports from all 3 agencies. Thank you so much.
Thank you.